Hi everyone, welcome to the 20-minute power play for Crypto Consulting Institute. My name's Sam, I'm the head analyst here at Crypto Consulting Institute. I work exclusively with the VIP and mastermind clients. So if you do decide to come on board with us, you'll undertake our educational course and then you're within our support system. So I'll be there in that first stage. And if you really like what we're offering, you can then go on to be an advanced client in the masterminds. And that's where I spend most of my time looking at data, crunching numbers and just seeing where the fundamental situations sit. So my job is basically to put all the information into bite-sized pieces for you to digest and make more informed investment decisions. So because we've only got 20 minutes, I'm just going to give you a broad overview of what we've been looking at for the past month and potentially what we're seeing and something that might help you make a more informed decision, whether you want to come on board with us or just in general in the investment sense. So what I'm going to do is share the screen and take us to the Crypto Fear and Greed Index. Now, this is a very helpful tool that we use with our clients a lot. Now, we can dive into it deeper. In fact, we do in some of our videos in the course, but just as a broad overview, this metric takes into account a broad range of features. So social sentiment, takes in different data sources, say volatility, market momentum, social media, surveys, dominance, and trends. So it's a very helpful, one-stop shop to give you a gauge of the fear in the market. And of course, on the flip side, the greed of the market as well. Now, why I wanted to bring you here is market psychology is a funny thing. Everyone wanted to buy Bitcoin when it was 50, 60,000, and now no one wants to touch it. Now, everyone thinks the opportunity is gone, but I will show you over the next few slides why we think that that is potentially a silly mindset to be in. Now, if we're looking at the Fear and Greed Index currently, it's at 23. Now, last few weeks, so the last few weeks of May, we were down into 10, 9, 8. Now, whenever you start to see those extreme swings of the fear index into certain direction, it tells you a couple of things. It tells you there's lots of panic in the market. It tells you a lot of people are fearful and they're selling their crypto tokens or their assets, their investments and whatnot. So that's filtering through all socials and you can sense it. You know, no one's suddenly talking about it in your friendship groups at the gym. That's a really good sign that we may have seen, a capitulation or we're close to some sort of bottoming out process where the smart money is coming in and buying up while the weak hands, as it were, as we call in this situation, the weak hands. So the speculators that aren't really here for the long term, they sell everything because they are absolutely scared that it's all over and it's going to zero. So when we see the dial really swing to certain extremes, we have seen it more times than not that eventually this does swing back, almost like a contrarian indicator. If we're at the extreme, you can expect things to start to come back sooner rather than later. This, of course, is an indicator to be married up with other things as well, fundamental situation and technicals as well. So this is a really great snapshot and you should use it in your day-to-day lookings at the market if that's what you're into, but very, very helpful to gauge sentiment in a really fast way. So here you can see now, yesterday, last week. So really, really sad situation in terms of psychology. And there was a great picture that I saw on Twitter that I just wanted to show you that buying Bitcoin above 50K, there are lines out the door. Everyone wanted to buy Bitcoin when it's above 50K. I know my DMs were blowing up from friends that I hadn't heard from high school and people I hadn't heard from a very long time, just curious about how to get into it. And the funny thing is, when the mania hits, when there's oversaturation of FOMO, so fear of missing out, you get a lot of people not looking to buy necessarily the best investments. They're not looking to do the research. They're not looking to, purchase for the long term. They're looking for a quick buck. They're looking to become overnight millionaires. Now, in this market, that is, of course, possible if you get really, really lucky. But if you're here for the long term, looking to build wealth, that is not the way to go about it. So we see a lot of people looking to buy, when it's in peak, I guess you can say peak hysteria and in a peak mode. That's not when you want to be buying. You want to be the smart investor. You want to become a sophisticated investor. You want to be buying when we see, dips in price. You also want to take into account the market cycle. Of course, the point of maximum financial opportunity is actually a bear market, but that's not where we are at the moment. We are mid-bull market cycle. So, there are strategies that we do share with our clients to use in bull markets as well as bear markets. And they work really, really well according to our trust pilots and also to the clients that I've spoken with. So look, that is something to keep in mind, that we are in a bull market, but psychology is a massive player, especially in crypto markets, because the market caps are so small. They are able to be moved quite quickly and quite violently by market psychology. So I just love this here, buying Bitcoin at 30K. So we've had the big haircut. We're at 60K. We've dropped down to about 30K, 36K last time I checked. And just no one wants a bar of it. So, crypto is one of the few places or few markets on earth, apart from the stock market, where when everything's on sale, everyone runs out of the store. And that's something to keep in mind where, there's so much opportunity in these markets currently that, and most people don't recognize it. They're running out the door. It's what, say, 99% of investors are like. We want to train our clients to become the sheepdog and not the sheep. Do not follow the herd, because there is so much financial opportunity with becoming that sheepdog and recognizing that opportunity where it sits. All right, and this is some data to back up just what I've been saying and why we think that this market's still got a lot to give in this bull market. So this is from Glassnode. It's one of the best on-chain analytical sources you can really find. Now, they do some great offerings on Twitter that are for free. If you want to sign up to them, they are a little bit pricey, but absolutely well worth it. So we're looking here at the data. So we've seen this is the Bitcoin price above here. So getting up to those, 50, 60,000s. And we did see a lot of new people come into the market, and you can see this by short-term holder supply. So that supply was actually peaking, as you can see by the purple line. So I'll just do this at a really brief overview. You can pause on this chart, have a greater look later. So that really peaked here. And ever since we peaked at around that 60,000, when we got hit with a lot of negative news in these markets, we saw a bit of a sell-off. So a lot of people got really shaken and panicked. This is what happens in crypto a lot. And I'll show you in the charts in a sec that in the previous bull market, we had drawdowns in this realm as well. But you can see that short-term holders start to completely fall off a cliff here. You can see the purple line completely falling. Short-term holder distribution. So they're just selling, distributing all their funds. They're starting to, panic, sell at a loss. You can also see that on other charts that most people that got into the market up here were selling at a loss on the way down. So it's just really, really sad. But while all this was happening, the smart money was actually accumulating. So long-term holders, so wallets with some serious Bitcoin in it. And we're talking institutions, we're talking funds. So we know how corporations are starting to buy Bitcoin. We know that whales accumulate Bitcoin on big drops. And this is that green line here. So you can see that as this is rising, long-term holders actually spotted that this was potentially a place where they wanted to start to take some profits. And you see the green line starting to trend down. And as the short-term holders start to distribute their funds, you can see the long-term holders recognize this and start to accumulate. You can see the green line sloping up, because this area here represents an area that most long-term holders see as a tremendous area of value. We've seen a 60% drawdown. So you're buying, everything at half price. Altcoins were hit even harder. So with the tremendous projects being built in this space, the opportunities are seriously there. Some altcoins did hold up really, really well in this Bitcoin drop, but not many. And that's what you need to learn as well, that Bitcoin is the anchor of this market. Bitcoin is volatile, and when it does get volatile, unless there's certain conditions met, altcoins will drop twice as hard, or if not more, against Bitcoin. And just here as well, miner accumulation here. So miners during this period were actually selling in a profit up at these levels. And then as we've had the big drop, miners are actually starting to accumulate, or they're just not putting. So miners, when they mine that Bitcoin reward, they're holding the Bitcoin and even buying more Bitcoin. They're not putting that on the market to sell. They're holding it, expecting higher prices. Now, miners do point, and their metrics do point a long way to seeing where the market is heading in terms of if miners are holding, thinking that there's going to be higher prices, then there likely will be. So that is something to consider. Now, if we go into just the chart where we are, I just sort of wanted to show you where we are currently. So this is on the weekly chart. So if you are looking at TradingView and charts, just zoom out. There's so much short-term noise because, a lot of people get into this market and they freak out seeing one big red candle on a 1 hour, a 4 hour and whatnot. But if you zoom out and just see where we're at, yes, we've had a drop here of about 50 to 53% on this Bitstamp chart. But if you zoom out to the weekly, does this look bad to you at all? If we are in a bull market, does this look bad? So our previous high in 2017 was 20,000. We broke out of that and around 27th of April, 2020. We are up at these levels. We're in areas that we've never, ever seen before. We're still, a good 10,000 above the previous all-time high. And in previous bull markets, that is incredibly normal. It's incredibly healthy. Now, what has contributed to this drop from our reckoning is actually high leverage traders. So new retail traders entering the space, going on to something like a Binance, taking out 100x leverage and putting, 10, 20, 30,000 to that. And then when the market turns on them, they get liquidated and it causes a cascade price action where it basically just goes like an elevator downwards. So we won't get into that too deeply, but it did contribute heavily once the negative news started to come out and those short-term holders panicked. And I just wanted to show you here on this way up. So green, 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 green. This is psychology. People just see green, 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 and they buy the green candles. When you want to be a bit smarter than that, you want to be a sophisticated investor. Of course, you can buy into strength, but you don't want to be buying at areas where we just look so overextended, where the value may not be there. You want to be buying, of course, the best time to buy was in a bear market down here, which we had many clients that did that, that have been with us since the bear market, and they're very, very happy at this stage. But you can still make tremendous amounts of money buying, these dips, these drawdowns, and just taking a step back and looking at where we are in the market side. And we dive into some serious depth on this in the course. So if that is interesting to you, I'd say absolutely get on that. But this is about as far as I will go into the charts for you. But yeah, we're just very big on taking a step back, looking at the long term. What's the overriding trend? Are you here for the next year, or are you here for the next 4 to 10 years for some serious wealth? Because you can make money in any scenario, and we're going to show you how to do that. Okay, I just want to pull you back to a larger index chart of the whole Bitcoin market over its entire lifespan. Now, if you're looking at this chart, what does it tell you? Well, it tells me that Bitcoin really never, ever goes down over the long term. Creates a peak and it has a drawdown in a bear market, then creates a higher peak, has a drawdown that's always higher than the previous peak and keeps going up. Now, this is greatly due to the 4-year halving cycle and also due to Bitcoin's finite supply. So we've got a finite supply decreasing every 4 years to the market, plus we have increasing demand as entrenchment grows over this period of time. It is the perfect storm for this asset, but of course there are downsides, there are risks, but just with the supply and demand side, there are some tremendous opportunities if you recognize that and are just in it for the long term. Of course, short term, you can make a lot of money too. Again, we will show you how to do that, but just looking at it here, looks very, very impressive that this is just a small pit stop on the way to its next bull market high. And I want to show you just in terms of previous bull markets, because we look at fractals a lot, and that's fractals just mean looking at previous market moves in the past to say, give us a guidepost of what may happen in the future. And what we're looking at here is just on the way up. Let's go to the weekly chart because you might be able to illustrate it a bit better. So on the way up to the 2017 top, you can see these red candles in the way of this almost like a staircase-like pattern. We see this pullback here of 40%. We see a pullback here of 43%. We see a pullback here of 32%. So if you actually look into it a bit more and really dive into the data, we had 7+ times or more in the previous bull market where we had drawdowns of 30 to 50% on the way up to a new peak. Now, you can imagine selling down here before we at say, $2,000 US, before we went to $20,000. This is what it means about not getting shaken out of the market and making a data-driven decision in your process. So this is what we want to illustrate where we are now. We have just broken into the bull market, you could say late last year or early this year, and we've had our first really serious pullback. Now, as Bitcoin grows, there are macro factors that really impact this. So these pullbacks may be larger, they may be shorter. We know institutions are here, so they are buying up heavily. So we don't know. History often rhymes, it doesn't repeat exactly. So we're just going to have to play it by ear, but this is perfectly within the norms of normal Bitcoin volatility. So I just wanted to point that out, that this may just be the first pullback in a larger trend, and the data seems to suggest that. All right, I want to go into a few pieces of news, and we're probably running a bit long here, guys. I know it's a 20-minute episode, but there's just so much to talk about in our first episode. So maybe we'll run a bit long this time, and then next time we start to bring it back a little, but I'm sure you'll appreciate the extra insights. Now, I wanted to bring you to a post. So this was a big bit of news that happened this month. So the US Treasury, or Biden, US government, is actually printing another $6 trillion for their budget. So we saw under the Trump administration, so we're not going to talk about politics, but the previous administration did $7 trillion plus of money printing, and the new administration is looking to do 10 trillion. So once they do this 6, I think they've done 3 previously. There may have been a few others in between there. So we're talking in trillions of dollars. This isn't small chump change. And when you see this continuously happening, and you see the level of debt that they hold, and you start to wonder, okay, they're printing all this money into the economy. Surely this eventually starts to create inflation. And because of COVID, there was a lot of deflationary aspects where a lot of this money that was printed actually went to paying off debt, went into bank accounts, went to funds that didn't really produce that money into the economy to start the velocity flying around. We are starting to see that velocity re-enter the market. Plus, the US government is printing more and more money. Now, they are the global currency reserve, so they can do what they want, but eventually this catches up. Confidence is lost in the US dollar, which won't happen probably in our lifetimes. Maybe it will, who knows? But it does aid the narrative that inflation is coming. Now, commodities, things like crypto, that have scarce assets or finite assets are really starting to fly. I've seen gold, do okay in the last the last few months to years, but hasn't really fired yet. We've got silver, and a lot of the commodities are really starting to fire. But just what I wanted to paint here is this inflation narrative, and it is a big one. Britain's inflation rate has actually doubled. The US inflation rate is higher than expected as well. So it's scaring a lot of people, and it seems like the central banks around the world do not have a solution to this. Their solution is to print more money, release more bonds, but it's not stimulating the economy, especially as rates are starting to go negative. So this is a massive narrative that we have to watch, because it just lends great credence to the crypto narrative, especially with Bitcoin being at 21 million only. So Bitcoin having 21 million Bitcoin only, it puts that supply cap on it. US dollars, they can print to absolute buggery. There's nothing backing it at all. So just something to keep an eye on there is the money printing narrative and central banks, I guess, power over the economy, and how it seems to be a little bit out of control, and governments are now just printing because they can, with no real stops to it, or say stops to the future. Okay, another big one we want to just show you here is PayPal made a lot of news last year when they said they would start to allow their customers to buy crypto. So we're talking Bitcoin, Litecoin, Ethereum, Bitcoin Cash, and potentially a few others. But it did create a little bit of controversy at the time, because they weren't allowing anyone to withdraw their crypto from their exchanges into their own hard wallets or a third-party custodian wallet. Now, this riled a lot of people, saying, well, that's not okay. You don't really own the cryptocurrency. And that's what we really want to teach in the course as well. It's not your crypto if it's not your keys. So taking custody of your crypto is the ultimate way to protect your security. If you're leaving your crypto or your keys on an exchange, you're leaving yourself open to be hacked. So you're creating a serious third-party risk there by not holding your keys. And if they're hacked, often they don't have insurance, you lose all your money. But if you take it upon yourself to be your own bank, take the custody of the assets yourself, we will show you all how to do this and how to store them through hardware wallets in the course. But it's just something to keep an eye on, because it's great that PayPal has finally opened this option. They always hinted that they might, but clearly people power in the community in crypto and people buying, they want to transfer their crypto off PayPal into their own wallet, so they can custody their own Bitcoin, Ethereum, Litecoin, whatever, in their own wallets for peace of mind. So this is great optionality, and it's great to see PayPal really coming to the fore. Okay, another bit of news over the month was a really great bit of news for Ethereum. So the second largest cryptocurrency by market cap. Ethereum just keeps going good guns. I mean, it's got DeFi being built on it, it's got the NFTs being built on it, and it just has the entire app ecosystem pretty much being built on it, apart from a few outliers as well. But the biggest headline here was $1.5 trillion $1.5 trillion of transactions were handled by Ethereum in the first quarter of 2021. That is absolutely insane when you consider PayPal only did a fraction of that for the entire of last year. Ethereum is absolutely gunning it. Now, and this is what we'll teach you in the course, that there are differences between cryptocurrencies, say the currency side of things, the smart contract apps, and then you've got other niches of cryptocurrency as well. So we'll show you all of that through the course, but Ethereum, just to do this, is just absolutely incredible. And you can see the growth. So this is all part of your fundamental analysis. You may start to hear a lot of FUD news, so fear, uncertainty, and doubt about Ethereum not scaling and whatnot, but that is on the horizon. And you just see the level of growth that happens in these cryptocurrencies that, if you're here for the long term, you just look at the growth numbers, you look at the wallet numbers, you look at that address growth, you see the interest. you see the amount of money flowing through it, and even US dollars locked away on platforms like Ethereum, and you'll get really, really bullish very quickly about where this ecosystem is heading. But that is all a part of the data-driven process, which you will handle in the course. But I wanted to show you that there is Bitcoin, and that is the anchor and the trendsetter, but a blue chip as well is Ethereum, and you cannot look past it in terms of when you're looking at building an investment portfolio and what it has on top of it, where it has really taken the mantle of those smart contract platforms. It's pretty much cemented itself where it likely won't be, say, usurped by an upstart at this stage, even though a lot have tried. Has the network effect, first mover advantage, and Ethereum keeps going good guns, and we're now seeing institutions starting to accumulate Ethereum. Okay, moving on here. So this last month has really been about billionaires, if I'm honest. We've had a lot of billionaires come into this space and really voice their approval of crypto, Bitcoin, the future of it, why they see it's maybe the alternative to the US dollar that we need, or even gold. Crypto and Bitcoin is very much what you want it to be, but as an investment thesis, this is really good because this tells you the smart money is really looking at it. They're endorsing it, so they've probably actually already bought it, and then they're coming out publicly and saying that they have. So everyone knows Ray Dalio, I'd say, in the investment sphere, and he just came out with an absolute bombshell this month. He says he prefers Bitcoin to bonds. That is huge. So the founder and co-chief investment officer of Bridgewater Associates, who's been called the king of hedge funds, announced he has bought some Bitcoin. And he says the more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than the bond, Dalio said in a long-ranging discussion. So this is a huge admission, especially because Ray Dalio was a fierce skeptic of Bitcoin almost up until this year. And we've seen a lot of other billionaires start to, I would say, capitulate. We've got Mark Cuban. He's now full on into Ethereum and NFTs. He now accepts it through his sports team in the US as well. But we've also had other billionaires like Stanley Druckenmiller, who's an investment genius. We've had Bill Miller, Paul Tudor Jones, and Carl Icahn. So when you see, I guess, people that have been skeptics of the space, the investment thesis, smart investors always change their mind when presented with new information. And a lot of these people have. And when you're talking about billionaires here that are making decisions with a lot of their money, and these people are investing, hundreds of millions, if not billions of dollars of their funds money, their personal money in this space, the future is very, very bright. So I just wanted to point that out, that the billionaires are signaling their intentions as well. Okay, moving on to our last bit of news. NYDIG, so a pretty big investment firm in the US that is doing some serious moving and shaking in New York and other places to get big funds, corporations and whatnot invested into Bitcoin and crypto, specifically Bitcoin, not so much crypto yet, it's predominantly Bitcoin. Regardless, the headline is nearly 50 million Americans own Bitcoin, NYDIG estimates. So the results were quite positive of both parties' estimations suggest that 46 million Americans own Bitcoin today. That's more than 22% of adults over the age of 18. Furthermore, the paper tried to establish a connection between Bitcoin and banks, although both are entirely different creations, with one trying to be precise opposite of the other. Many banking institutions have been more open-minded in terms of crypto adoption as of late. Some US giants like JP Morgan, Morgan Stanley, Goldman Sachs, and BNY Mellon have already announced plans to get involved in one way or another. So you can see the big institutions, the big banks are seeing their customers are demanding this, and their customers are already owning it. They want to provide custody solutions. They want to provide derivatives products, whatever they can to make money off the situation. Maybe some of them are realizing that potentially if Bitcoin really takes off, the writing's on the wall. If DeFi takes off, the writing's on the wall. Maybe they want to get in on this before, it's too late. They see they need to get a piece of the pie before it's too late. That's why we see a lot of this institutional demand coming in. And these are big players, Goldman Sachs, JP Morgan. BNY Mellon is the oldest bank in the US, and they were one of the first to say, we're going to do Bitcoin custody. So guys, the future is very, very rosy through this picture here in the long-term sense. And that's what we want to get across. This is about long-term sense. We're not about creating overnight millionaires. Although you can, it is incredibly challenging to do so, and you might be a bit of luck involved. We want to create sustainable wealth, and that's what we're all about here at CCI. Guys, again, apologies if I've gone too long. I hope you've enjoyed this. If you've got any questions about this recording below, please post them. If I've missed anything or you want to ask me a little bit more in detail about any of these pieces, feel free to, because I haven't been able to go into as much depth as I wanted to, but it has absolutely been a blast talking with you guys today. If you want to get in touch with us, please message us on the link that's posted on this post. You'll talk to one of our team members and we can take you from there. And maybe one day we'll have a chat in person. But again, had a blast. Have a wonderful day, and we'll see you you for our next episode next month, and it will be the first Wednesday of next month as well, but we'll do a post in the groups to remind you. So guys, enjoy your day. See you later. Bye.